Hi, thanks so much for joining in. You're watching BQ Prime. My name is Alex Mathew, and we're talking about the fall that you're seeing right now on the screens when you're talking about the equity markets. And that may not be in evidence for the large caps, but on the broader end of the spectrum, you're seeing quite a bit of selling. You have the small cap index that's down about 2.5% at this juncture, and the mid cap index also losing ground. Perhaps the largest fall since the 12th of September, when you saw quite a bit of a crack in the broader markets. To talk about this more and to lay the context for this conversation, Niraj Shah, markets editor at BQ Prime, is joining in. Niraj, a lot of global factors perhaps at play. Bond yields, what according to you are the biggest factors right now?
You know, the interesting thing is, Alex, everybody today is taking a guess as what the factor could be, but nobody seems to quite have the answer. And I would love to understand what do you think of the kind of falls that have happened as well. But I'll give you a small, the small construct from my perspective. We said in the trade setup this morning that it is very unlikely the market will find a level from which the markets can bounce back. You know, I was surprised in the morning to see the GIFT Nifty showing that uptick as well, because things don't particularly look rosy on the geopolitical front. The yields may have come off from 5% to 4.96, but they are at that level. And crude oil, couple of dollars lower, doesn't make it any different in terms of how tough a scenario it is for a bunch of emerging markets. So there is a factor of global plays, geopolitics plus macros, which is against. And most people that I spoke to today as well, and I'm talking about blue-blooded investors, is talking about the point that there was a case any which ways for India to be corrective. Gautam Trivedi of Nepean today spoke about the same as well. There's anyways case for India to be corrective. The fact that it started today, or maybe started on October 17th, from the day when the mid-cap and the small-cap indices have started falling, is only coincidental, and we are talking about it now. But it could have well started on October 12th, well have started on October 30th, because there's a case that could be made at any given point of time of this happening. And last point that I want to make here, while we're talking about this, remember that in buckets or in sectors, some of this has already started to play out, right? A few days ago, we saw those illiquid PSU stocks cracking 10% each or whatever, 12% a piece or whatever it is for 2-3 consecutive days. So the nervousness anyways there, I think it's just coming to fruition today.
Right. And in fact, you pointed out the 17th of October. By the way, the blog very nicely captures this in a data point for the various sectors that have fallen. And if you look at the IT index, for example, that has come off quite substantially. We saw a lot of bank earnings over the weekend. And I was looking at the last week for S&P 500 as well as a frontline index for the US, which has come off over 2%. And we haven't seen the Indian indices come off to that extent. So I guess to a certain extent, we were also looking for that excuse to fall. Could it also be on account of the curtailed week and the fact that we don't know? There are a lot of question marks as to what can pan out through the week. So you could see some bit of profit taking before that comes to pass?
Yeah, so it'll be interesting to understand from data that our guest will bring up about the derivative piece as well. And yes, whether one day in such a volatile scenario makes people be a bit risk averse. But I must tell you, Alex, I know a lot of people say that, you know, this is yet another fall and everybody's talking about it and falls have been bought into. Somehow, the nature of the conversation with some very smart investors today is that this today seems to be slightly different than an average mid-cap, small-cap correction. And one just wonders if this is the start of something that could get ugly, 4-5%, 10% for an index level at the broader end of mid-cap and the small-cap, but individual stocks could fall just so much more. Yeah. Because today, I don't think the market is differentiating between the good and the bad. The good has some gains. The bad is being punished like there is no tomorrow.
Certainly. In fact, CK Narayan, who writes a regular column for us, has also pointed out the broad-based weakness that we're likely to see. And also on the benchmark, he's pointing out 19,200 to 19,000 levels, which is quite interesting considering that we're still around 19,400.
Yeah, and that too. So by the way, just a quick, and then I would want to ask this to Alex from a mutual fund perspective as well. But here's the point. Just look at the plates that we've put out for you and the kind of corrective moves that are happening in specific stocks. So small caps down over 2%. Real estate index is down 2%, and real estate was a pack to hide for so many people. So there's a clutch of buckets out there which are actually correcting thick and fast. And Alex, what a tough day to start in NFO. Yeah. Lovely to get Sameer's view there. Yeah. But that notwithstanding, the interesting piece is that we've got 16,000 crores of SIP
Yes.
money. Small caps continue to get in funds, I believe.
Yes.
And yet small caps, which have rallied so much, are getting punished. The other interesting piece is, Alex, that YTD, we may balk at this 2% move or downtick right now.
Yeah.
YTD mid caps are up 23%, small
Yeah.
caps are up 27%.
No, certainly. And in fact, that is what a lot of people have been concerned about to a certain extent. The fund managers that manage these funds, there have been fund houses that have put, and you know about this, put small cap fund launches on hold for now, saying that, we don't want to traverse into this, considering that we're looking at markets that may not justify the kind of valuations that we're seeing right now on the small cap end. So yeah, certainly that is a bit of a challenge, but let's get our expert on just to get a sense of what the technical indicators are also suggesting. We've got Chandan Taparia, who is head of technical and derivatives research at Motilal. Thank you so much, Chandan, as always, for taking the time. Help us understand some of the factors from the technical point of view that could be leading to this selling in the broader end of the spectrum.
Yeah, thank you, Alex. Thank you, Niraj. So looking at the market, we witnessed some profit booking in last couple of weeks. However, the nature is more of the consolidative even after the profit booking from higher levels. If you look at the last 4 trading session or 5 trading session, the Nifty has corrected from 19,850 to 19,400 zone. So almost correction of around 450 points. But even after this correction, we are still in a broader range. Because if you look at the price movement of last 22 trading session, we are moving in between 19,333 to 19,850 level. So we are witnessing some decline because follow-up buying is totally missing in the market. And why I'm not much worried? Because your India VIX is not moving up. When market falls down, your VIX has to go up. But today your VIX is down by 5%. So I totally believe the selling pressure in Nifty is because of the weakness in the global market and some selling because of selective havers name. But as of now, the way global market are behaving, and Nifty weekly chart has taken a pause with some turn in the negative side on the most of the mechanical indicator, I believe upside is going to be kept. So as of now, I'll play the broader range between 19,200 to 19,650 in the Nifty index with the view of having the kept upside in the market, but at the same time, expecting decline, but not expecting major panic in the market from current levels.
Interesting that you say that. I also wanted your perspective on a few of these pockets, as we were pointing out, that have seen quite frenetic selling, if you can call it that. The metal pack, for example, down quite substantially. The realty pack down very substantially. IT over the last 1 week or so, Chandan, down quite substantially. So what would you say about these packs where you're seeing a little bit of pressure?
Yeah, so like many people ask us that why your VIX is down when index is down. But actually the selling is mainly into the selective sector and selective stocks. So Nifty is down by 100 points, but mid cap, small cap and selective sector indices are much down. So I believe some sort of profit booking and distribution is visible in market. And because of that, some sort of consolidative nature may emerge over the next couple of weeks. So talking about Nifty metal, it has been falling down, comparatively underperformed the broader market. Weakness in the global market is also a reason that why metal stocks falls. So I believe some more profit booking could be there. Talking about Nifty metal, which is trading near to 65.70, can dip to 6,400 for the correction of 2.5-3%. If I look at the Nifty realty, most of the real estate stock are down. However, major trend has not changed, but intraday and short-term trend has given signal of some profit booking decline. So Nifty realty also may see the corrective swing. And already we started to notice the formation of lower highs, lower lows. So metal and realty both are likely to witness some profit booking decline. And I also want to talk about Nifty mid cap and small cap. Selling pressure is there, and both the indices are now going below its 50-day exponential moving average. So one need to exit the profit or can reduce some positions with the view that again can buy on the further declines in selective indices.
Chandan, Niraj, is there on the derivative side, because of the existing positions that have been built up or would have been built up over the last few days, is there a pocket that looks either very heavily overbought or oversold and could be particularly in focus for you?
So like if you ask on the oversold side, then we notice that selective banks, especially if I talk about Axis Bank, we have seen a huge short built up in the counter. I remember the day like on 4th of October, when the stock fell from 1,035 to almost 990 kind of level. That day, 25-30% OI added. And after that, it had further corrected, but now the pace of selling is missing. So I believe because of that, the stock can drip to 960, 950. But I think near to that stock, we find some comfort and short covering could trigger. So this is the one counter I'm looking, where some sort of stability could be there, and that can change the scenario of the Bank Nifty index as well. Apart from that, I believe that selective capital goods counter are witnessing sustained built-up of short positions, including if I talk about ABB, where we have seen corrective move. If I look at the other capital goods name, Siemens is one counter where we are witnessing lower top, lower bottom, but follow-up selling is missing. So because of that, Siemens may find support near to 3350 to 3400 zone. So these are the few names where structure is weak, pace of selling is not there, and OI data indicates some sort of stability.
Interesting that you point out Axis Bank, but from the frontline private sector banks, that's the one result that we're looking for on Wednesday. So, perhaps some interest ahead of that. But let's get your top picks. I know it's a little hard in this kind of scenario to talk about, key levels to watch, but what according to you are the ones that you would highlight?
Yeah, it's not tough because market always provide the opportunity on the upside or downside. I've selected one counter which has comparatively resilience at the time of market decline, that is ICICI GI, ICICI General Insurance. So if you notice, it is forming a positive price pattern. If I concern about technical setup, it is forming or on the verge of breakout of pole and flake pattern on the monthly and the weekly chart. From last almost 15 days, it is making a high top, high bottom on the daily scale, holding well above 1400. So I believe with support of 1365, it has potential to move towards 1480, 1500 level. So ICICI will be one name where I can keep the radar. Apart from that, one has to be very selective because sector-wise selling is more there in the market. If I have to go with a defensive nature, then I'll select Oro Pharma. However, Nifty Pharma is not done well, but Oro Pharma is somehow forming the positive price pattern after the decline of last 7-8 days, holding to its 50-day exponential moving average. So with support of 855, 860, stock can head towards 930 kind of level. So I think ICICI GI and Oro Pharma are two names where one can focus on long side. And if I want to add one more, that in auto pick, then I'll discuss about Mahindra and Mahindra. So major trend is positive. Consolidation seems to be over. Even after the market pressure, the stock is not falling below key support zone. So I think with support of around 1530, one can look for 1650 kind of level in M&M. So these are the 2-3 names where one can go with the contra bait in the market that your index is falling down. But these stocks can find stability, and a small pause in the weakness in the market may give the face alpha to get the further momentum.
Absolutely. Chandan, to you and your team, from all of us here at BQ Prime, happy Dussehra. Thank you so much for taking the time and for speaking to us.
Thank you so much.
All right, Niraj, so there you go.
Ain't turning out to be happy, Dussehra, I must tell you, if you look at the markets today.
Well, but then I guess glass half empty, half full, if you think about, like, as you were pointing out, the year so far, it's not been a bad year so far.
Yeah, most certainly. Well, one let's just see how deep, let's just see if this becomes a start of the existing trend even becoming even more vicious. Hopefully not.
All right, let's hope not. But on that note, that brings us to the end of this particular chat. There's lots more lined up over the course of the day. And in fact, you'll find even more on the website bqprime.com. So don't forget to check it out. Thanks so much for watching.